Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, May 22nd. Before we get to today's show, I want to highlight some exclusive reporting from the Information yesterday. My colleague Srimupidi found out OpenAI's first quarter financials, $5.7 billion in revenue. That is $1 billion more than what Anthropic did in the same period. Codex was a big driver for OpenAI's revenue. There are more details in the story. I encourage you to check it out. Today on the show, we are talking about corporate data wars. Microsoft has entered the fray with its own contentious decisions around data access. We are also unpacking SpaceX's valuation on our weekly segment of the Editor's Cut. We're going to take both a bottoms-up approach and also a market-based approach to our analysis. We're going to close out the show with the co-founder and CEO of Mercury. The company just raised a big funding round. We're going to talk to him about the current state of fintech and what is next. It's going to be a fun show, so let's get right on into it. Microsoft has waded deeper into the corporate data wars with a contentious decision that has ruffled some feathers of certain companies that it partners with, like Databricks. I want to bring on Kevin McLaughlin, our enterprise software reporter, to walk us through the inside reporting that he published this morning. Kevin, welcome back to the show. It's great to have you here.
Thanks, Akash.
Okay, so what's going on with Microsoft and Databricks these days?
So this is something that happened about a month ago, but the ramifications are now becoming clear. Basically, last month, Databricks launched a feature which allowed its customers to manage their data in Databricks and then do visualizations and charts and things in a Microsoft product called Power BI. And now what happened was Databricks launched the feature in early March, and then a month later, Microsoft abruptly cut off access to it. And so basically what's happening is this is a battle for a type of software known as the semantic layer, which is going to require some explanation. And it was a little bit of a journey doing this story, so I won't try to attempt that here. But basically, Microsoft wants customers to use its software to build their semantic layer. So does Databricks, and so does Snowflake. So everyone wants to be the place where customers define their semantic layer. And so what's happening is this is an emerging battleground of what we've been writing about and what we've been calling the AI data wars. And I'm happy to go into sort of the deeper explanation of what semantic layer is.
We're gonna do that. I mean, I think this is core to the story. But I mean, so broadly speaking here, we are going to dig into each of these terms, but I mean, this is an issue of basically Microsoft blocking access in certain ways to Databricks, and this being part of the broader corporate data wars, AI agent data access story that you've written about for quite some time now.
Yeah, this has to do with basically most of the Fortune 500 uses Databricks, Snowflake, and Microsoft. And so what's happening is you can kind of do things as a customer using all three of those providers, or you can just do them all in one provider. And so Microsoft sort of has a history of saying, hey, you can do everything within our products, and so why wouldn't you? And then it's sort of what's happening is that everyone wants to be the place where customers define semantic models. So I wouldn't say it's like blocking per se, but it's sort of like, how do you make it easier for customers to kind of do everything within one ecosystem? And so I know that's kind of a complex answer to your question, but
okay. Well, let's try to go a little deeper here then. So explain to us in the simplest possible terms. I mean, what is the semantic layer, and maybe let's think about it from a perspective of we use enterprise applications, for our HR stuff. We have a good idea of that. So, I mean, I see what I see, a dashboard, for example. What would be the semantic layer behind that? And we can get to sort of what's the battleground here.
Okay, let's say you're a company. You have raw data that's coming in from retail point of sale systems, from sensor devices, from all sorts of places. And so that raw data is inherently ambiguous. So, for example, there's data about revenue, but that could mean net revenue, gross revenue, invoice revenue. And so the semantic layer allows companies to come to common definitions of what revenue means and what those categories mean, so that you don't have finance creating their own definitions and marketing creating their own definitions. So semantic layers have been around for a long time. They're a core part of what's known as business intelligence software or data visualization, which is what Power BI is. And Power BI is one of the most widely used products for this purpose. And so the semantic layers are now becoming very important, not only for that, but AI agents need to have these definitions as well.
So
And
so it's like a standardization of the data type of thing, like an agreement on the definition of revenue, of expenses, dollars, what like stuff like that?
Yeah, there's standard definitions of data from which different departments in companies can work so that, again, so everyone's not going off in their own directions. And the end result is more accuracy for the reports, for the visualizations. But it turns out that AI agents really need these definitions as well. And they can actually be much more accurate and even cheaper to run if agents have these definitions.
Hmm. Now, and I guess maybe some semantic layer 101 here. So, would these definitions be unique to each company, sort of thing? So, how one company defines this segment of revenue, that would be unique.
Yeah, if you're a customer and you're using Databricks, Snowflake, Microsoft, you don't want to have to define those definitions in each product. But essentially, that is what is happening. And so, um, when we say the battle, there are companies out there that are trying to develop sort of standards for the semantic layer, so you can do it once and you can use it across a number of different products. There's a organization or coalition being led by Salesforce and Snowflake, which is attempting to define a standard so that customers don't have to reproduce this work across different products.
Got it. Okay, so now that we have a better understanding of what the semantic layer is, so then let's go back to it. So you said that it's not a block, so to speak, but what exactly is Microsoft doing then to make it more difficult to Databricks to access this? What's the issue here?
So Databricks launched a beta feature that said, okay, if you're a Databricks customer, you can define your semantic layers inside of Databricks, and then you can use them to create charts and visualizations in Power BI. And then a few weeks later, Microsoft, without explaining why, um, Block stopped supporting that feature. So for Databricks customers who were using it, the reports just sort of vanished overnight. They stopped working. Subsequently, and for our story, Microsoft explained that they had concerns over reliability and accuracy with the feature. So they were concerned that customers of Databricks would use this feature in Power BI and they wouldn't get accurate results. And then at the end of the day, customers might blame Microsoft for that. And so it's a valid explanation. And later, a Microsoft executive explained that, look, we're not going to support third-party semantic models in Power BI because it's complex. There's not really much reason to do that for customers. Again, a valid explanation on technical terms, but perhaps one that also has a business motivation as well. So it's kind of this thorny issue that's happening. And these are all partners that work closely with each other. So these are not like rival companies like putting up toll booths around their data like we've been talking about. This is a little more subtle than that. But at the end of the day, the semantic layer is the new battleground
Yeah.
for
But
AI
so
data.
Kevin, I wanna go on that. So if this is not the story that we've been talking about, the rival companies sort of putting up the toll gates, like you say, and it's more partners that are sort of, developing nuances to the relationship. I mean, why is this something that we ultimately should be paying attention to? What are the stakes here in terms of what this could mean for end customers?
Everyone wants AI agents to be more accurate and even cheaper to run. Semantic layer is part of this type of data known as context that you're hearing vendors talk a lot about, context, and some products even have the name context in them. Context is the rich food that agents makes that makes them operate more accurately. And so If you have the context and you want to give that context to an agent, it even means that the agent doesn't have to reason as much before making decisions, which means they're consuming less tokens and they're cheaper to run as well. And so there are lots of benefits to this type of data, and that's why semantic layer. You're going to be hearing a lot more about it in the coming months.
Because this is really, I mean, as long as these customers, or as long as these companies are developing more and more guardrails, I guess, around what data is accessible or not, that will then have an implication on how good the models need to be, how much compute is consumed, and so this is actually one of the starting points here of what could very much be these companies ending up turning a profit in the end, if I'm understanding you correctly.
Sure, sure. And like I said before, there's this sort of industry coalition that's working to sort of make this a non-issue. And I think that you're going to be hearing more about these open efforts as well, because at the end of the day, the proprietary approach is going to slow things down. And we've seen this many times before in enterprise software. That's why open source software exists. And so, the proprietary versus open debate in regards to semantic layer, it's going to be a hot topic. It might not be, headline news for everyone who reads tech news, but trust me, it is very
But
important.
but we like to talk about it here on the show, so that's why we like to have you here, helping us make sense of it. Kevin, I want to thank you for coming on. That is Kevin McLaughlin, our enterprise software reporter here at The Information. SpaceX's S1 gave the world some new data to crunch as we all seek to answer the question, what should the company really be worth? Outside of that, this week there were also a number of other big IPO-related headlines. To unpack all of that in this week's edition of The Editor's Cut, I want to bring on Martin Pierce and Meredith Mazzilli. Welcome to you both. It's great to have you here.
Hey, Akash.
Hey, Akash, how's it going?
I'm doing well. So I don't know if we'll get an answer here, but we'll get some versions of an answer. What is SpaceX worth is the topic of discussion. Martin, you wrote about this. You took a bit of a bottoms up approach, I would say, to valuing the company in last night's briefing. And I want you to walk you through how you were thinking about coming to your valuation.
Sure. Now, I will just say, as Meredith, I'm sure, is going to say, so let me preempt her.
Oh,
So
no.
I really annoy her that SpaceX is worth whatever people are willing to pay for it. So let's just get that aside. But really, what I wanted to do was to try to clear away all the murk and the sort of drama and mythos around flying to Mars, flying to the moon, all this sort of stuff that Elon loves to talk about, and just look at what actually is in SpaceX. And what it really is a telecom firm. It rents or sells satellite broadband terminals to people around the world, and they can get access to the internet from them. That means it's basically like a cable operator or, so uh, that's a fairly plain vanilla, business. It's also moving into cloud computing. It's rented out um, some of its, AI computing capacity to various companies like Anthropic. I guess that's the only one. Um, Although it said it wants to do more of that. And it's got a small advertising business in X. Um, and so it then, of course, it also launches, the rockets, and that is maybe one of the businesses that people are most, focused on, but it's actually one of the smaller parts of the business. So what I did was I just looked at each of these 3, and I looked at the closest comparison in the public market, and I looked at where those companies are trading, and I applied the multiples at which they are trading to the revenue figures that we got from SpaceX, and I tried to also calculate, based on the first quarter, numbers, what those businesses might do this year, and I came up with a number that suggested that the most generous, and I'm being very generous, valuation for SpaceX would be around 700, and I think it was 50, no, sorry, it was around 700.
That's 700 billion. Yeah, yeah. I think you got to 600 and
78.
678 billion
Sorry, the
dollars.
reason I'm a bit confused is I went through various different versions and had to keep adjusting some things.
Okay, so 678 billion, whatever, 700 billion.
700 billion.
It's not
Now, I will say-
1.7
I will
trillion.
say some people, and you had someone on TITV yesterday, Ross Gerber, who's much smarter than I am, who said it's worth 500. And, I wouldn't argue with that. It really depends on how you do the calculations and what you compare it to. But let's say it's worth somewhere of that order, 500, 700, something like that. The idea that it's worth 1.75 trillion is crazy. But, that extra is just
Okay. So we got it. I follow your logic, and I will say to folks that it is a great analysis and a good piece, so I encourage everyone to read it. But, Meredith, I want to come to you now. I guess I'm going to ask you now to justify the 1.7 trillion valuation, or at least provide another perspective as to how you think investors might get there.
Yeah, look, so I'm not going to sit here and argue that SpaceX should be worth $2 gajillion or whatever, but I will point out that I do think the sum of the parts is just one way to model valuations, and it doesn't capture the whole picture. So I don't think we should put too much stock in that as, the golden number of what something should be worth. As Martin explained, you're kind of adding together what all these individual businesses should be worth on their own and kind of squishing them together. But with SpaceX, it's actually very different. Unlike a lot of other satellite companies or mobile operators, they're a lot more vertically integrated. Their launches put their satellites into orbit, and there's very few other companies that can do that. So just on that basis, I think there is a bit of an issue, sorry, Martin, with the sum of the parts analysis. And that's before we get to even Starship, data centers in space, all of that. And once you start looking at that, that really just starts becoming more of a scenario analysis. So if this happens, what weight do we assign to this happening? What value did we assign to that? Again, I'm not saying that the big number that is out there for the IPO is necessarily the right number, but there are different ways to think about it.
So the other topic that I wanted to talk to you, Martin,
Martin,
anything to
I would
add?
like a rebuttal. Yeah.
Some of the parts is only one thing, and it's not doing that. That's true. It's definitely true. But, companies that have, many different businesses usually trade at a discount to that analysis. So you could say that SpaceX is worth 500 or even less. I mean, anyway.
Even less. How low are we going to go here?
I don't know. But I mean, look, the big problem is that we don't know when any of these things will happen. And do you really want to buy something when it's almost as if you were buying something in a store and the person says to you, this will work, but I don't know when. And so you're paying an awful lot like buying a car. You pay a huge amount for the car, and it won't work immediately. But at some point in the future,
Well, it's
Well,
venture
it
capital.
will work.
It's venture capital. That's what a
No,
venture capital
In the
investment is.
meantime, there is
let me
a
just
real
point this out.
yeah.
You're buying a car. Say you're paying 3 times the price of the car, and on the promise that when it does eventually work, it'll drive really fast. But here's the problem. We have no idea if it will ever work and when it will. That's my analogy for this IPO.
I mean, Meredith. It's kind of what it's like a venture capital. It's just offering stock market investors a way to be VCs in some ways.
Yeah, I mean, maybe the more accurate sum of the parts is you have this functional real business. I think you can't argue with that. And then there is this venture
Right.
part of it that is on top of it, and thinking of the two and how to combine those together.
Well, Martin, and let's just go back to, I mean, so $678 billion, I should say. Just walk us through, roughly speaking, how did that break down in terms of the what you got for the space business, the connectivity business, and then the AI business? What was the biggest in the end
Well, the
you?
biggest was the space business, and that's a bit of a strange thing. It's because even though the space business, actually revenue from that is fairly small, I was using as a comp a company called Rocket Lab, I think it's called, which is trading at an extraordinarily high valuation. Um, it's the closest comp to SpaceX, which I thought was the right one. And I also thought, well, given the promise of what Elon is hoping to do, maybe it's fair to apply a very high valuation. That's why
Right. And
when I come up with this overall number, it's very generous and it's higher than what other people have actually put on it.
And I found it interesting, and Meredith, maybe I'd love your reaction to this. So the AI part of the business, XAI, that Martin valued here. I mean, the number that he got to was $165 billion, and that was based on the revenue that had generated. Uh,
Well,
I
no, sorry,
mean,
that's based on the number that they will generate from Anthropic. Yeah.
right. But my question for you, Meredith, I mean, XAI here, I mean, it would be the smallest of the three segments here, and it's the one that, uh, well, yeah, I mean,
The Starlink is worth about 150.
100, oh, smaller. Okay.
You're also forgetting X. It's worth 3. Let's just think, how much did Elon pay for that? Oh, yeah, 44.
Water under the bridge, yeah.
44 billion. He's destroyed $41 billion worth of value. This is the guy that investors want to give all this money to for SpaceX. Elon is very good at destroying value as well as sometimes creating it. Let's not forget that.
Okay, last topic, Meredith. I do want to get your take here quickly on the IPO market at large, because this was just one IPO related headline that we saw this week. We also had the news that OpenAI is fast tracking things. We saw Aura has filed confidentially. Blockchain.com is back in the mix as a company that you and I tracked very closely
Yeah.
on our IPO tracker once upon a time.
It's been
Uh,
kicking around there for a while, yeah.
what do you make of this? Is this a window that's going to last a long time?
So it will be interesting to see how this plays out and if this really turns into a have and have not situation. We do have potentially 3 mega IPOs coming this year. And then we have these smaller IPOs from consumer companies, crypto, though we'll see what happens there. But do the big IPOs really just take all the attention, money out of the picture for these smaller IPOs? I think that with consumer companies, there is an argument right now that they're also well positioned because they're kind of like the AI proof play, right? Like AI is not going to get rid of the fact that you need to wear an Aura ring. It might impact maybe some of the software, other add-ons, but there is an argument that some of these consumer brands are pretty AI proof, and we're not going to see a SaaS apocalypse there. Blockchain, I honestly do not know what they're thinking. We have a couple other crypto companies that actually filed confidentially uh, a few months ago, I think even late last year, that are still just sitting there. The crypto market is down. They could just be positioning for optionality, but that one was a bit of a bit out of left field.
Can I just make the counter argument on Ura? And I do agree that if you look at the comp on that one, I think it's Garmin. Its stock is up 18% this year. So you might say that Ura has a pretty good chance. But Google has just come out with its own version of this sort of health tracking product. I've just ordered it, actually. It cost $100. Ura costs how much? 400, and you have to pay some fee. I think I would avoid Ura.
Well, but it's a ring. I mean, it's a
Oh,
ring.
yeah.
It's not the
A
wristband.
ring. It's a bulky ring. Who puts a ring on their
I
finger?
mean, well, okay, this is more of a Google taking on Whoop than it is on but I am Samsung. I think, if I'm not mistaken, I mean, Samsung was going after the ring category
Yeah,
as
forget the
well.
ring. The ring's so over.
Okay. All right. Well,
You heard
we
it
will
from him,
see.
from me first. Ura is over. Google, whatever
Oh,
I've
okay.
forgotten what it is now.
All
I think
right. Well, I
um,
look forward to seeing how
it's
how
a
that
risk
plays
thing.
out.
I think it's a risk thing.
I want to thank you both for coming on. That is Martin Pierce and Meredith Mazzilli, two of our editors here at The Information. Fintech company Mercury raised $200 million in Series D funding at a $5.2 billion valuation. The funding round was led by TCV and also included Andreessen Horowitz, Sequoia, and Coatue, and a whole host of other investors. Joining me now to talk about the current state of play in fintech is co-founder and CEO Immad Akhund. Immad, welcome to the show. It's great to have you here.
Yeah, thanks for having me. How are you doing?
I'm doing well. How are you?
I'm good. It was a really busy week, but we're just wrapping it up all the announcements and things like that.
So you done this is back-to-back years for funding announcements, right? You mean you were just valued at 3 point something, I think, last year, right?
Yeah, so last year, about 12 months ago, we raised from Sequoia at a 3.5 billion valuation. We had a lot of really strong progress last year. Actually, Q1 this year was our strongest kind of growth quarter we've ever had. And it was 2.5x higher applications compared to Q1 the year before. So we thought we'd kind of, jump on that momentum and raise around.
So strongest quarter yet in Q1. So what does that turn out to be in terms of revenue?
We announced our revenue last year in Q3, 650 million annualized. We've continued growing. We're not announcing a new number, but we're seeing 50% plus kind of growth on most of our metrics. And we're really feeling like AI has created this kind of extra boom of entrepreneurship right now. The Q1 kind of
so 650 Q3. I'm gonna see if I can
ballpark. You gonna do live math there?
650 Q3. You said 50% growth on most metrics, which if we take revenue, so what? Q3 this year you'll be trending around $1 billion, maybe annual run rate.
Wow, hopefully more.
Hopefully more. Okay. But you're getting there, maybe. Am I in the right ballpark?
We're not announcing it right now.
Okay.
But
all right.
We will announce it when it's in, when we hit the next milestone for sure.
Okay, so you got 200 million more in the bank. I was on your website this morning, and so you've got 4 classes of products laid out there on the website. You've got banking, cards and expense management, payments, and intelligence. And I mean, I'm just trying to understand sort of the structure of the business here. I mean, where is most of the revenue coming from today in those 4 categories? And then conversely, which one is the fastest growing segment in there?
So we started as kind of providing this operational banking to entrepreneurs. That was our first product. And, we focused on early stage startups. So 1 in 3 startups use us in the US. We've grown since then. So, our next product was this kind of credit card and spend management product. And then we launched a bill pay and invoicing product. And then about, I guess a couple of months ago, we announced an acquisition of a payroll company. So we're going to kind of, the company's called Central. It's still running, but we're going to kind of merge the brands and have Mercury Payroll. So, because banking is obviously the oldest, and so is our kind of corporate credit card and card business. That's where most of our revenue is still. Kind of. So revenue on the deposits and then interchanges where, our kind of 2 big revenue streams, although we have like 3 or 4 others.
Right. And so, I mean, if you look at, so what, payments and intelligence, are those sort of the two newest categories that you're trying to invest the most into?
Payments is a core part of banking. So, we keep improving it. We just added RTP for our users to make it like real-time payments. But we kind of mostly bundle it. We do charge for FX when you do international payments, but it's free. Intelligence, we've been adding more and more kind of intelligence features, right? Like there's kind of 2 main categories right now we focus on. One is letting you access Mercury wherever you are. So we just launched a CLI. So a lot of people are using Mercury, using
CLI is
CLI is like a command line interface to Mercury. So you can have your Claude Code or Codex like talk to Mercury and say like, hey, summarize my transactions for last month, or show me what things I need to approve. And people are like plugging in Mercury into their kind of AI workflows. So that's a really big kind of category. And then the second thing is we're launching features within Mercury that let you kind of apply intelligence to Mercury. So we launched Insights, where you can kind of summarize your transactions, see what's happening. And then in a few months, we're going to launch Command, which will let you do complex workflows within Mercury. So you can say like, hey, I just hired someone. Can you set them up for me? And it'll kind of set up their payroll. It'll issue them a card. It'll do all the steps to like getting them set up. So we're right now the intelligence kind of layer is given free to our customers. We kind of think about it as like something that draws more customers to users to Mercury and drives retention.
Basically, intelligence being all these AI tools that can help them make sense of all of their banking information, payment information, whatever is in Mercury.
And run their finances, right? Like I think the
Right.
future is these interfaces like kind of solve problems rather than like our features. Like people come to Mercury and they're like, hey, I need to do my board report for Q1. Like tell me what I need to put into it, and like we can generate a lot of those numbers
Right.
because we
Do you think you would? I mean, eventually, would you think about charging for stuff like? I mean, thinking about all the AI tools. I mean, everyone's coming out with AI financial tools, including OpenAI. Conceivably, this might be a paid offering in the future.
Yeah, potentially. We'll see. I mean, I think for things that go off and do a lot of things, like it's like, hey, do a financial plan for me, and like, maybe incorporate a lot of different data, and it takes like 10 plus minutes to do. People are used to paying for that kind of AI, right? Like this kind of pro version. So yeah, I think there's elements that we could definitely charge for. Right now, I see it more as like, let's figure out let's launch a lot of features, figure out which one resonate, and kind of go from there. We're still, I would say it's only been since the end of November that like Opus 4.5 came out, and I would say, like a year ago, most of these things weren't even possible. So I would say when it comes to applying AI to financial services, making sure you're not hallucinating numbers and like doing like way riskier things, I would say we're
Right.
still kind of early to that. So yeah, for us right now, it's let's figure out like what really resonates with users.
Can you? I want to get your sort of perspective on sort of where the fintech sector is at broadly right now. I mean, if you look at the last 6 years, right, there was the boom of the ZERP era. There was obviously the banking crisis that happened. What was it? 2023, I think it
Yeah.
was. And then then we saw some fintech company. Obviously you guys raised money last year, but I feel like 2024, 25 things started to come better. But then I look at now the share prices of some of these fintech companies, certainly the ones that have recently come public, and I mean I won't read through all of them here, but I mean you look at the year to date share prices and they're all pretty ugly right now. So I'm sort of unclear where we are in the fintech. I mean I know you guys raised money, but fintech broadly right now seems like a pretty tough environment. And I eventually I want to get to your perspective on like, companies like Klarna really diversifying their product suite and what you think of all that.
Um, I really like building when like everyone's like, wow, fintech. Yeah, I started in 2017 and no one was that excited about fintech. And then, every year they got really, really excited. And then 2021 was, I think, 20 or 25%
Yeah,
all
yeah, yeah,
funding
yeah.
in the US went to fintech. And then everyone was not excited about it. And, to me, I'm just like, I look at this industry and I'm like, hey, financial services is just ridiculously big. Like 2 trillion in revenue goes to banks. And it's still so early. You probably don't use a neobank for your kind of banking. Most businesses still don't. So I think the opportunity is huge, and fintechs are kind of attacking in lots of different ways. So what I would say, how I would summarize like what's been happening recently is there was this kind of wave of fintechs in this kind of 2015 to 2021 era that got started, that got funding,
Yeah,
etc.
yeah.
And we're kind of in this wave where like they've reached maturity, and we're all becoming kind of multi-product companies that are attacking the market in different ways. So Mercury's doing that through kind of small businesses and startups, and starting with banking, and this I guess Robinhood is doing it from like this kind of stock angle and kind of adding new features. So I think there's like a maturation where we're becoming kind of multi-product companies, but the category is huge. What's happening in like
Yeah.
public markets is influenced by all sorts of things, right? There's a SaaS
Wait, well, I
apocalypse.
mean, so like, I mean,
Yeah.
the number, like Klarna's down 43% year to date. Chime is 32% down. Nubank is down for 24%. SoFi is down 44%. Like, what do you, and this is much more in the market. So what do you think people are reacting to here with these fintech share prices?
Yeah, that means our valuation should be 50% high, actually, assuming we're like getting indexed against those public markets. What are people reacting? I mean, I I dabble in public markets, but they're all over the place, right? Like they go up and down. I think underlying, are these companies making progress? And there's some that are doing better, that are doing worse. So, uh, yeah, I don't know if there's anything that's changed in fintech this year that like people are reacting to. I think this is like macro effects.
What do you find yourself spending most of your time on right now as CEO? Certainly, as you look ahead to the next year of your business and spending the $200 million.
So we've been profitable for the last 4 years. So we're adding the $200 million. We're not going to
Yeah.
be spending it down. The two big focuses for me and Mercury are, number one, we applied for a bank charter that we got conditional OCC approval for last month. So a lot of this year is, operationalizing that bank. There's both kind of product work being happening, and then there's just a bunch of processes, especially for kind of at scale fintech to become a bank and get a bank charter kind of live. So that's a big focus for me. And then the second one is we are doing a lot of kind of exciting product launches. So this year already we went live with Mercury Personal, which is our personal banking product. We went live with Mercury Insights. The Mercury CLI thing, and then we have like 2 or 3
Right.
launches coming up.
So things are going pretty well. But what scares you right now? Would you say as the co-founder and CEO of a banking company?
I don't know. I mean, I think it's a really exciting time to be alive, right? I think there's
But
but a
nothing,
lot.
Eddie. I'm just
Yeah,
I'm trying to get into sort of what's
yeah. You're trying to
really.
get into it. I mean, I think there's a really fun post that went up, like I think over the weekend from Didi about this kind of crazy kind of vibes in San Francisco,
San
where there's
Francisco,
like a
right? Yeah, and then Packy McCormick
so
had a nice response to it. I thought
yeah.
he said, "I just came back from the park in New York and I didn't hear Agent once."
Yeah. So I think that's like there's this like energy in San Francisco where like everyone's like, oh my god, the world is changing, and like you want to be the kind of part of that change. So I don't know if it worries me, but it's definitely something that I'm like, keeping up with everything coming out and like making sure that Mercury is part of that and
Yeah.
at the edge of that is definitely like, I'm not worried about it, but it's definitely something that I'm like energized about.
So, but I mean, let's go to that post then. So is that I don't live in San Francisco. I live in New York. I mean,
Yeah.
I'm wondering, like, is what Didi said in the post, is that actually the case? I mean, are people walking around like
Dude,
saying, like,
there's a serious frenetic energy in San Francisco right now. I actually responded to that post and said there's like some people that look at this post and think I need to, I never want to go to San Francisco. And there's other people that look at it and say I need to move to San Francisco right now. And I
yeah,
think, I'm much more in the second camp that like San Francisco is just like kind of the center of this. And I've been here for almost 20 years and there's always something new, right? When I first moved here in 2007, it was all like Facebook apps, like every party you'd go to would be like, someone launched an app and they got a bit
I
million
mean,
users.
Facebook launched a new app today. Even like
Yeah.
they're still launching new apps.
No, I'm talking about the apps built on the Facebook platform.
Got it, got it.
Yeah, you're too young for that.
No. No. I mean, I had Facebook apps as well.
Yeah. But yeah, so I'm just saying there's this like these waves come in San Francisco and it creates this like frenetic energy around it. And like that's kind of the power of San Francisco that like, it jumps really early on these waves. And sometimes it's stupid and like they don't come to anything. And then sometimes they change the world and you end up with like another kind of, I guess nowadays $1 trillion company from it.
Let me just ask you very quickly. So, 6 months from now, 12 months from now, let's say we see the SpaceX IPO, the Anthropic IPO, OpenAI IPO, et cetera. So that frenetic energy that Didi talked about, it sort of materializes into this situation where you have a lot of people who have gotten very rich, right? And
Yeah.
maybe people start to leave these companies. I mean, I guess my question is, a year from now, assuming this all plays out the way people think, what do you think that has kind of a structural impact on like the founder ecosystem in San Francisco? Do you see more people starting new companies with that cash? Or
I was thinking about this, right? Like, if you think about every year, like VCs invest a certain amount and they have these like big funds. When these 3 companies go public, there's going to be a lot of money that opens up because if you think about, even this year or last year, like 30 billion went into those companies. And like investors are going to still want to invest that 30 billion. So I think the second order effect is more money will open up to other private companies. And then all of these companies are going to create a bunch of like, not just like millionaires, like 10 million and plus, like this, if you have
Yeah.
$1 trillion company with 1,000 or like 10,000 employees, that's like a huge kind of liquidity. So I do think there's going to be a sudden like liquidity increase in like people wanting to fund companies and there being a lot of money available for that. I think it'll probably open up talent as well. There's probably a bunch of, I know a lot of people that have got sucked into those companies that, once they get some liquidity, they might want to do their own startup. So yeah, I think there's, assuming the bubble doesn't crash and like these companies don't go to, there's obviously like some like macro effect that could happen. I actually think there's going to be a really big boom in like number of companies, a number of like investments. And like we're already in that
And you have,
boom right
you
now.
have angel investors. All these people. I'm sure these
Yeah.
people want to put their money to work somehow too, and help, and maybe even start their own venture funds. I'm guessing here. I don't know.
Yeah, 100%. And I think house prices in San Francisco are going to become even less affordable.
Right. Right. When are you guys going to go public?
We don't have like any current plans. We only launched about 7 years ago, so we still think of ourselves as a pretty young company. Our focus right now is get this bank charter live, and I think in a few years' time, that'll be kind of stabilized, and we'll look at like kind of the next thing. I do want to build a public company. I love having our customers be owners in Mercury. We actually did a crowd fund as part of our Series B in 2021. And we got like 3,000 customers investing in that. So I'd love for us to be a public company, and I see that as like part of something Mercury has to do. Actually, getting a bank charter, you end up doing a lot of the work you would do as a public company. You have to do quarterly financials, and you have to have a bunch of controls in place and audit committees, and all these things that you normally wouldn't do until you're public. So we'll be in a pretty good position after the next couple of years.
Right. Great. Well, Immad, I want to thank you for coming on. That is Immad Akhund, the co-founder and CEO of Mercury, here on TITV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media on X, Instagram, and TikTok. I'm already excited for our next show on Tuesday, I should say. We got Monday off. Have a great long weekend. We will see you soon. Bye-bye for now.